Maybe we'll cut this thing, maybe not, but we'll see. Even if we don't see 300,000, at least we'll be alive.
I would exit a deal if my gut is telling me something's not right.
99% of people think about is, oh, it's my competitor.
We've done 375 loans in those 13 years. Last year I did 60.
I had Ruski money.
Instead of getting personally disappointed or upset,
I saved Corey's life. I'm not kidding. That's what lazy is. It's a natural thing. I want you guys to understand the basis to your success.
Value Add Podcast. Unfiltered insights from real estate's most successful players. Always adding value.
Welcome to Value Add Podcast. My name is Rafik Moore. I'm the CEO of Brait Capital, an investment company located in Minnesota. And today we have a special guest, Corey McClure. Corey McClure is not only my friend, my partner, my investor, but mainly he has been my original capital partner. And I want you guys to meet him and understand how he thinks, how he philosophy, and how he operates, because I want you guys to find Corey McClures in your market. And if you don't, you can always call him and he will be happy to invest.
Sounds good. Thanks for having me, Rafik.
Always adding value.
And then how do you start investing in real estate? You are an executive or some kind of a corporate guy, right?
I was doing computer software sales, computer hardware sales right out of college for 13 years at a computer company in the Twin Cities. Got laid off during the Great Recession, like 08, 09, and then just started getting into property investment. Just saw the opportunity. And
how much capital did you start with?
I probably had about 300,000. Mm-hmm. So I was buying a house, fixing it, selling it, or keeping it.
Yeah.
I'd keep it, I'd refinance it, and started doing about 3 a month, about 35 a year.
Nice.
But I first was wholesaling. Before I started flipping my own, I was wholesaling. That's when we met, when I was wholesaling stuff that I didn't want.
And you probably saved out $300,000 working in this corporate job. So just like me, not a silver spoon fed guy with trust fund or anything. Just all of us here are self-made guys, except for some of our friends. Of course, we're not going to mention names. They know they're watching. What's interesting is when you meet other investors, the first thing that 99% of people think about is, oh, it's my competitor. And they want to keep their information guarded and stuff. My approach is different. My approach is always, let's collaborate, let's work together, let's unlock this value and share the upside together. And that wholesale, you sold me the property, made a little bit of money.
Then I started doing hard money lending.
So Corey became a hard money lender. Any of your hard money lenders could potentially become your partners because they already know real estate. They know the interest rates, points. And then I say, look, you can make more money if we do it this way. But Quincy was the first one. Interesting. I remember that house.
Quincy was the first one. $115,000 I lent you early January. Late March, you paid me back $120,000 and change. So I made like $5,000.
I made 50.
Yeah, on one of my hard money loans. And then after that, we did 21 together, all the way to 2012 for the next 6 years.
We were 21 as a hard money lenders, borrowers.
Through we were Equitron Holding. I lent you Investors Capital LLC, Bell Properties, LLC, and Caspian Ventures LLC. Those are the 4 properties. You were flipping houses with partners yourself. And I lent you about $3.7 million over those 6 years, right, on 21 different properties.
Do you recall when we actually started the Envision commercial? So Corey and I own a company, LLC, holding company called Envision Commercial LLC. And the intent there is for us to collaborate where Corey provides most of the capital or all the capital in the beginning. And I provide the deal, the hustle, the work. We own 9 properties right now in that portfolio.
Vision was, the tagline of it was helping tenants envision to be owners, property owners. So first one we bought was on Bloomington, or in Bloomington Avenue and Lake Street, restaurant that the restaurant owner wanted to buy. The property wasn't able to, had some down payment. You and I bought it with a bank loan, sold it back to him on a contract for deed.
4 apartments upstairs.
Yeah, 4 apartments, salon
and restaurant. Yeah.
So one of those older 1930s, 40s built. So we started Envision. I did look that up. June of 2018, 7 years ago. We've had 13 properties total. We currently have 9, and we sold 4. The other one we sold was on Lake Minnetonka.
Yeah, Park Avenue.
That was, I think, our one loss.
Yeah, we lost money on one. So one thing that you have to
happens.
learn is
We got a lot of doubles, triples, and home runs, and one loss.
one of the biggest issues that so much of what this is psychology of managing your relationship, managing egos, right? Corey's a very successful guy. I'm not as successful as him, but but my point is
Opposite. Equally successful.
yeah, everybody's successful in their own ways. But Corey is a really good dad. He's my mentor in how to be a better dad. I always watch him with his daughters and love it. Anyhow, I guess what I'm trying to say is that if you meet somebody in a networking event, a hard money lender, an investor that's flipping houses, and you really lean in and understand who they are, how they think, what their investment philosophy is, and find a way to collaborate and add value to them. When I approached Corey, and we did a lot of deals at the time, I was short on money, as always. I'm always short on money because every time you buy a property, commercial asset, you need to put down 100 to 200, $500,000, $1 million. And of course, deals got bigger and more complex. But I had a deal, and I thought, this guy wants to buy the restaurant. I got to put down $100,000, we're gonna make $100,000 on it. Plus, there's about $3,000 to $5,000 of cash flow every month. Yep. It's a layup for us as investors. And I said, Corey, if we're gonna do this, the returns are gonna be well in excess of 14% for you. I think it's 20, maybe 25%. I don't recall. If you do it this way, and if you trust that I'm a good partner, let's create an LLC. Let's try one, and then when you try the first deal is nothing but a down payment on the next one. And so I see a lot of people haggle over $2, $5, trying to earn more money on their construction or whatever. And I'm like, dude, it's wrong. Serve your investors, serve your tenants. And if you do it right, they'll come back to you. You did another deal with that customer.
I did two more.
Two more deals with that customer. Yep. Yeah. We did a lot of deals, and Corey and I have very similar values: integrity, work ethic, consideration. I'm just a little more active, and I'm all over the Midwest now. But he opened his hard money lending business grew into a very, very successful enterprise. Tell us about that.
I migrated from flipping houses myself. I was doing about 3 a month, 35 a year for 4 years. And then I built my portfolio of houses that I kept to about 43. Decided at that point, kind of step back from flipping properties and instead starting lending out money to one of the rehab contractors that worked for me. He came to me and said, I'd like to do what you're doing, but I don't have the funds, but I have the skill to flip the houses, which he did. He was a contractor. So again, partnered with him, started up a partnership that we split the profits at the end. I would put up the money, he'd do the fixing. And therein kind of launched my hard money lending business. So I've been doing that since 2012 for the last 13 years.
How many loans do you do per year now?
We've done 375 loans in those 13 years. Last year I did 60, turned through about $63 million over the last 13 years. And
you hear that? $63 million that Corey, on average, generates about 14 to 15%. What's your average yield?
18%.
18%. That's not average. That's what you charge. But then don't you have fallouts? Don't you have like well, I don't know. You tell me. What is your average return when you talk about the full lending business?
If it's my funds, it's 18%.
Is what you charge?
Is what I charge. 3 points up front, 12% interest, 6-month term. So I turn it twice. So I collect that 3 points twice a year to be 3 plus 3 plus 12 is 18%.
You have payroll, or do you run everything yourself?
I have one person on staff that helps me with the documents, and she probably charges me 8 to 10 hours a month.
So it's basically your business.
$300 a month for an admin to do some paperwork and track some of the loans, and then a loan officer that just gets paid on the closing statement by the client. So I do get money from friends, family, relatives.
You raise money to do that.
I pay them 8%. So if I am using somebody else's money, I net 10, they net 8. Still the 18% return is just split with my partners.
Good income.
As partnerships and adding value and helping others, people that have money sitting idle in the bank. My dad, my uncle, my friends, my neighbors, I want to put it to work to earn more than 8% on something tangible that they can see and touch and feel.
Well, that's why I set up Brait Secured Fixed Income Fund. Yep. And I just need me a Corey to run it because I'm so busy with buying my own buildings. but maybe we can team up on that. And we've talked about it.
Yeah, we did our first one last week.
Yes, we did the first investment where I did a hard money loan.
Mark that down as milestone 2025.
Exactly. Now, you are a hard money lender today.
Correct.
How many partnerships do you have with guys like me where you are a capital partner?
3 others.
Okay.
Yep.
So describe to me your philosophy in picking the right person to work with when they have a deal and you provide the capital. Because the biggest thing that my audience has, or some of my mentees have, is the limiting belief that they don't have any money, so they cannot do deals. So kind of elaborate on how you work with your investors and what do you look for?
Mainly their character and the longevity that they've been working in the industry. So individuals like Marlene, who I've been lending money to, kind of like I started with you, lending them money. They were doing flips. They migrated into commercial, bigger deals, syndications, and we kind of grew with the relationship.
You built a relationship with them.
Built the relationship, have the trust, have dinner together, call our friend like I call you a friend, same type of thing. We mutual belief in a lot of the investment philosophies we have, but likewise just family and friends and how we work together. So
values are very important to you.
Yeah.
When you team up with them, because who wants to be partners with litigious drama queen, right?
So we've had good success. We try one and it goes well, and
do another one.
Go to the next one.
Yeah.
I haven't had too many partnerships that have failed or gone wrong. There's been ones I just haven't entered into because it didn't feel right. We didn't have the same values. We didn't have the same vision. We didn't have the same work ethic. Ones that I felt like I was doing anything and everything, and they're just kind of on my coattails versus let's do this together, and we're each putting in 110% and working mutually. Some of it have been family, and some of them have been investment partners like yourself.
One of the things that I want to share with you is there's guys like Corey who are real estate investors who have cash, who invest, but one of the reasons why they will share upside with you or as a managing partner of the deal is when you have access to a deal. But outside of just having access to a deal, Corey is, and many, many people also will always judge your character. Now, they cannot know about your character in a first meeting. But if you don't believe in the possibility of this happening to you, if you don't go to these networking events, if you don't do the legwork and study the subject matter, if you don't understand how the economics of deals work, you'll never get there. And so one thing I tell my students, my mentees, is that you need to believe that this will happen to you. The ability to do deals and make money and be financially free is possible to you. And you got to keep going into these networking events, meet with other investors, collaborate with bankers and title companies, and take people to lunch. And that's when magic happens, because every single city, every single town will have hundreds of guys like Corey. Not to mean that Corey's a boring white guy. I mean, there's a lot of wealthy guys with capital that would be elated to get 15, 18, 20% on the investment with somebody who has good character. So one thing that I want to tell you guys, character is one of the biggest things you want to invest in, and that's your brand. It's comprised of integrity, humility, consideration, the values that guys like Corey and I and many, many people that I know like is discipline, right? Not being all over the place. You come one day, say, oh, let's do this apartment building. Next day, say, oh, let's invest in Bitcoin. Third day, you come, oh, let's invest in a startup for, soybeans or whatever. And so what happens is they lose interest in you. They think you're a bumbling fool. But if you consistently tell them, hey, I got this apartment building. Here's the thing, though. Corey probably said no to me 5 or 6 times before. That's okay. But my secret is when I was doing these deals, I had 5 guys like Corey, my partners. My relationship with Corey, my relationship with Fred, my relationship with Andre, and many, many others allowed me to have this opportunity to buy these buildings. And the urban legend is that I had Ruski money, like Russian Putin money. Like, how is this guy? Where did he come from?
Right.
This guy going around town buying everything, and he must have some kind of Russian backing. I was like, well, let him keep talking. Like most brokers, like, nah, no, my partners are right here.
Yeah, an Irish broke.
Yeah.
Backing.
Exactly.
German.
What's been your favorite deal so far with us? And not Burrito Loco, I'm sure.
Not Burrito Loco, no. Probably the favorite. I think the Invergrove Heights Mall was the favorite. It was one of our first ones. It was half full. It was quite a stretch to, buy it initially and then trust that we were going to get that other half filled up.
For those of you who don't know, I have actually a video on that on that deal. Yeah, we did a video a couple months ago. But anyway, so we a wholesaler calls me and says, hey, I got this building in foreclosure, 14,000 square feet. The guy's completely lost it, and I need $20,000 for you to take the property. I was happy to do it. We walked through it. Initially, it didn't work out. And then we bounced. 2 months later, the seller called me directly, said, hey, let's go back to the table, drawing board. We ultimately bought that property for $650,000. It needed a roof. It needed an asphalt. It was 50% occupied. And I think we spent, $300,000 to stabilize the asset?
Yeah, about that. Yeah.
So we are into it for $1 million. And based on the pro forma, based on NOI and whatnot, this thing is worth $2 million today. So effectively, Corey and I made $1 million in equity. We didn't pay taxes on it because it's not realized gain. But the property has been cash flowing consistently around, $10,000 a month?
Mm-hmm. Yeah.
So for those of you who are starting out, go out there, find a 14 to 15 to 20,000 square foot property that's distressed. There's a lot of distress right now, guys. Economy is struggling. People are struggling. Then find the Corey. No, find Corey first, okay? Or call Corey. He'll give you contact information. Find the building, right? Understand the problem. Solve the problem. And then once you stabilize that deal, it will change your life forever. You can quit your job. You can have passive cash flow coming in. And that deal didn't take us a lot of time, right?
No, it was just finding a good leasing partner and Rustam and landing that tenant. And wasn't a lot of, it was a daycare prior.
Yeah.
So it was already configured correctly. Just needed to be cleaned and freshened and reoccupied, and the building spruced up and looking nice and not distressed.
One thing about daycares, they're really good businesses because they never leave. They serve local community. People keep multiplying. There's a lot of kids. And these daycares, they stay there for years, 10, 20 years. And so this daycare will pay off the thing. If I was a daycare operator and I was really, really smart, I would call Corey or me and say, guys, I want to buy it and cash us out. But it's okay. We could just sit on it and another 5 years or 10 years pass and the building will be paid off. Yep. But Envision's mission is to sell these assets. Because we're flipping houses, we were like, we're going to flip these commercial assets. But if you keep a property, makes $10,000 a month and mortgage goes down and the value goes up, there's really no necessity to sell because you got these long-term leases. One of the questions I want to ask you, which is very important for our viewers, is what is your advice to a new investor?
I would think the best thing is to figure out your core competency, what you're best at, and then establish a team around you of what you need assistance with. So I knew when I started flipping houses that I was good at the processes and the business part of it, but I wasn't going to be swinging the hammer and I wasn't going to be looking at all the properties.
So contractors, realtors.
Good, right, exactly. Realtors, title company, contractors, financial advice, CPA, accountant. You could do it all, but don't try to do it all. I turned in my 40-hour-a-week job for an 80-hour-a-week job running that business. There was no way I could do all those other components. So find trusted partners to establish your business first and have that structure. But as far as working, with me on the hard money lending side, it's just showing some track record. Funding a first one is difficult. Do a couple yourself, show that you've been able to be successful, and then partnering with somebody
with experience
becomes easier to do.
So effectively, one of the things that I'm hearing is that if you have never done a deal, unless the deal is smoking hot and unless you're absolutely amazing and Corey likes you, very unlikely he'll do a first deal with you. But that shouldn't preclude you from pitching to Corey or guys like Corey. You pitch him once, you pitch it to 10 guys, right? Out of 10 guys, there's one chance, one guy will probably give you a chance. Boom, you got one going. Then you pitch these 10 guys again on the second deal, on a third deal, on the fourth deal, and eventually all 10 guys want to do business with you, and you have unlimited amount of capital available for your deals. Ask me how I know. What is the biggest blind spot most new investors have in raising capital, in your opinion?
Probably just initially focusing on just contacting banks, financial institutions, the standard, regular, typical way that you would finance, and thinking, well, I don't have a good credit score. I don't have good, tax returns. I don't have good savings. So I can't get a loan from a bank, so I can't do this.
When I met Corey, my credit was in shambles, just saying.
Yeah. So if you're starting off finding alternative sources of financing, people that, friends, families, coworkers, relatives, or other investors that have been successful, like you, like me, like others, that you can learn from them along the same time as getting funds from them. So look beyond the traditional
approaches
and work with individuals versus big institutions.
I'll ask you another. I know we're jumping around, but I really want to communicate the essence of how this relationship evolved. And by the way, this right here is how most of the real estate deals are done on a small balance commercial level, up to $10 million. Above $10 million, then you talk in institutional money. That's not what we do right now. Most of the business we do is with private partners like Corey. And sometimes if the deal is too big and Corey is not fully liquid, he would say, look, I'll come in with $300,000. And that's it. That's my contribution. And then I'll get $300,000 from Fred and Andre. And we put together like a $2 million investment. And we invested in a deal in St. Louis with one of our friends, Alex Oliver. So I guess I can't stress enough that a lot of it has to do with the relationships and an essence of who you are. That's why what I want to teach my mentees, my students, is not just economics of deals, 1 2 + 2 = 3. I want to teach them how to be so that guys like Corey would look for you and invest with you. Because believe it or not, there's actually people who have businesses looking for talent, looking for guys who have learned the blueprint, who have learned how to operate these deals. They look for them, and then they say, hey, dude, Rafik, I want to meet with you. And I said, okay, nice to meet you. What's up? It's like, I got $10 million. I'd like to put it to work. I'd like to get about 13 to 15%. I had a meeting like that recently.
Okay.
I was like, great. So we go to the gym, we hang out, and it works great. And so to me, all right, I have this resource, capital resource. Now I want to find a deal, and I want to make sure. One of my secrets is that if somebody says they want to get 15%, I want to overserve. I'll say 15. I want to make sure I give them 18 to 20.
Sure.
And they're like, oh, wow, this guy over-delivered. You over-deliver on the first one, bam, they're hooked for life. And then you got really good friend, partner, and a person who will consistently stay by your side.
Always adding value.
Let's say you know a guy, and he's a real estate operator. He does some deals. He's in the mastermind, and he's got a really, really good smoking hot deal in an area where you want to invest. Mm-hmm. You've never done hard money loans with him, but you like the guy, right? And you think he's good. He's like somebody like Rustam, for example. You've never done deals with him. And then he says, look, I got this deal for $1 million, and I need $250,000 to buy it. And I need $100,000 to fix it up. But I think stabilized, this property, Corey, can be sold for $1.6 million. Better than that, I have a buyer right now who might move into the space and then buy it in 12 months. Would you consider, in a situation like that, to invest with that guy, give him all the money, and how would you structure that deal?
I would certainly invest in an opportunity like that. Structure-wise, we could create an LLC together and be 50-50 partners on it.
On the first deal, because I'm trying to build a relationship, I'll say, Corey, because it's your money, you be the chief manager. You make all the decisions. That's what I do anyway, so that you feel safe. I want to make sure Corey feels safe and secure. Anyhow, so 50-50 works. would you put a pref on it? What if I said 1.6 and then things fell apart and then we sold it for 1.2 and then the return is 7%? That's not fair to you, right? So would you do a pref on it, or would you be okay with without a pref?
I'd be okay without a pref.
Well, I wouldn't be, because I've done more deals as a capital partner, and so anyhow, not trying to be greedy. I do way more deals than Corey because I'm just prolifically do deals. So we do a deal, promises are made, promises are not kept, and then I put up all the money, and we made 8% return. And then the guy gets 4%, and I get 4%. Well, that's not fair, because opportunity cost of capital was never satisfied. When I learned that lesson, I said, all right, guys, here's the thing. If I borrow money from a bank or from a line of credit, whatever, it costs me 8%. My time is worth money. And I said, I'll do 8% preferred return or 10% preferred return, and then we split the money. And I do deals like that every day. I don't have a lot. I don't have as much capital as Corey, but I'm not a hard money lender. Plus, I do my own deals. But that's one of the things. So the structure that I tell you guys in the class that I teach on basically is what Corey would do. And I think this sort of a setup is kind of universal across the whole economy of investments. But what you would look for is a return that's north of 18%, right? Yeah. Because if it's less than 18%, it's like, dude, it's not worth it. I can do it with hard money loans with a less risk, because equity is higher risk. A lot of us are cerebral, and a lot of us have like intuition and gut feeling. In your decision-making process, how much of it is gut feeling and how you feel about the situation, the client, the deal, and how much of it is absolutely economical numbers?
For me, it's probably 2/3 on the numbers. I'm a detailed guy. I'm a numbers guy. I'm a spreadsheet guy. That needs to be first. And then I would exit a deal if my gut is telling me something's not right. That's definitely the last litmus test. The last piece is, fairly conservative. I haven't got into a lot of big risky deals. I've certainly taken chances, but if it doesn't feel right, smell right, look right, a lot of due diligence and
just walk away.
Working with other people, researching the individual if I don't know them that well, talking to their associates. And so, yeah, it's probably 2/3 on the numbers and 1/3 on the gut feel.
And so the gut feel is basically a character question. Numbers are numbers. When you approach Corey with your deal and you say, hey, here's the executive summary, here's the address, here's the pro forma, here's the current NOI, etc. All those things will weigh 2/3 in his opinion to do the deal. 1/3 would be how he feels about you as a person, how he feels about the deal and the area and stuff like that. So you got to remember that it's not all economics. There's a lot of psychological things going on in the background. Who are your biggest influencers or mentors in business and finance? I've always been curious about that.
One of my biggest is an individual that helped me start. It was a good college friend, Mark Hoffman. Taught me initially when I moved from computer sales, computer software sales, hardware sales, into the real estate investing. I was just green, so I took his course.
Oh, yeah. Was it paid course or free course?
I paid him a little bit. He ran a course of his own, but being a longtime friend, college buddy, he just kind of put me on the quick executive course, if you will. A couple $100 a month, one meeting a month, just kind of the basics.
Oh, nice.
Really helped launch my real estate investing.
House flipping business career.
Yeah, house flipping business. At the time, it was focusing on foreclosed properties back in 08, 09. There were so many foreclosed properties. So finding the foreclosed properties that were still in the redemption period. Yeah. So that structure. But really, it was setting up my business, my 3 main questions of why you're doing this. And setting goals back when I was 35 that I wanted to retire at 50, which I accomplished, that I want to have something to pass down to my kids and legacy, which I accomplished, and working with good people and setting up good partnerships that would extend past me and my life to have a legacy.
So Mark Hoffman gave you all that in his class?
No, it was
your own.
Step back and think about what are your 3 big whys, because when things get challenging, when they get tough,
Those whys keep you
when
going.
you're up against bad situations, you can look back and say, okay, why am I doing this? And because I didn't want to work for somebody else and just on a random Tuesday morning get a pink slip that you're no longer employed. I want to build something of my own for myself and for my family. And then what, a specific goal, like how much do you want to make, for instance, at this point, do you want to be done, or what age do you want to retire, or, looking back on finance side, probably my dad.
Yeah.
My dad ran a construction company for 35, 40 years. We would always talk shop in the vehicle at home.
You guys grew up in Hutchinson, right?
I grew up in, small town.
Small town. So a small town boy. Like you grew up on a farm?
No, I helped work on family's farm,
Okay.
uncle's farm, cousin's farm, but small 10,000 person town. So on the business acumen and the financial side was my dad. Just learning from young, like your kids, seeing what he did, how he did it. He had 35 employees, ran a multi-million-dollar construction company. And
Wow.
was, not the nuts and bolts of how you put together a building, but running a business was that component. And then I would have to say yourself too on the investing side.
Yeah.
Mark on the business structure and initial invest. My dad with the financing, and you as a visionary and a mentor for helping me.
I never saw myself as your mentor. I saw myself as your little beggar for money. Give me money so we can do deals, but I appreciate it.
No, because I think in any partnership you learn from each other.
Oh, well, thank you. I appreciate it. You're my mentor in being an amazing dad. I watch you and how you handle your daughters, how you go hunting with them. I'm like, man, Corey, I want to do that. He's like, yeah, let's go. Let me finish these couple of deals. So problematic.
Took ice skating.
Yeah.
We checked that box.
Yeah. And we were supposed to go skiing. I told my kids we're going skiing, and we went skating. My English.
Yeah.
So like, screw you.
Julie was so mad.
Yeah.
She's like coming over expecting to go skiing and go ice skating in Maple Grove. She was pouting. She was so upset.
One of the defining characteristics of every single self-made, really, really successful person, whether it's a female or a male, is this concept of continuous improvement and leaning into mentorship. I've learned that to be the fact. I got my first true mentor in 2012. And before that, I sort of dabbled in a lot of things. I had a lot of advisors who really didn't accomplish as much as I wanted to. I really didn't have any specific person who can lean into and ask questions when I had problems. And it had absolutely tremendous impact on me. Many of my friends don't know, but I feel like I'm 10 years behind. I constantly feel like, dude, I'm 10 years behind of what I could have been, because from 2003 to 2012, 13, when I bought my first building, I didn't have a mentor. I didn't have a tribe or community. And lack of having a community and lack of having a mentor, I did a lot of work. I didn't really build a lot of wealth. I made a lot of mistakes. Point is, once you have a mentor, once you have a community, it really helps you to center yourself and pick a lane, because all these guys are doing the same thing in real estate, right? And then the other thing is, every person is a mirror of your potential, right? Mm-hmm. In every person you hang out with, in every person you associate with on a regular basis, represents a mirror of who you can be down the road. So if you surround yourself with a bunch of people who are way more successful than you, it doesn't have to be money. It can be triathletes. It can be musicians. It can be dancers. I did jujitsu for a while. If you have 5 black belt jujitsu friends in your life that you constantly deal with, subconsciously something happens. Your motivation kicks in. You either will become a black belt in jujitsu, or you'll jump out of that relationship because it doesn't really feed your soul. And so to me, I realized that so much of who we are is based on our subconscious. Our conscious mind wants things. We want to achieve things. We want to get success and money and fame and chiseled six-pack. But our subconscious mind is what actually drives us. And the job of subconscious mind is not to make you happy. job of subconscious mind is to keep you safe, fat, and out of trouble. And when you go and invest in deals and take risk, your subconscious mind scared says, no, don't do it. Don't call that guy. Don't approach Corey, because he will say no. Rejection is one of those things that people are really scared of. So many of people are not going to approach you. They'll think, oh, he's a competition. He's not going to do it. And so it's so important to understand this dynamic between your conscious and subconscious. It's a way of becoming a whole self. That's how you become extremely successful, is by understanding and controlling your subconscious. I feel lazy all the time. I'm a normal guy, but if you control your subconscious mind, yeah, but no, I actually feel like I'm very, very lazy. And unless you control your subconscious, and lazy is a byproduct of subconscious mind telling you, hey, let's preserve energy, let's build some fat, because if the winter comes and we don't have any food, we'll survive longer. That's what lazy is, right? It's a natural thing.
Always adding value.
What kind of assets are you interested in? And what kind of assets are you absolutely going to stay away from? I want our audience to know so they don't pitch you the wrong deals.
Office and retail, I would stay away from
Personally,
personally right now. I don't have any office in my portfolio, but I have enough retail.
A lot of retail, yeah.
Portfolio. I think I've got ample of that. Industrial, warehouse, small bay flex use, apartments are all some of the areas that I'd be looking at, and along with just, investing at the hard money in people that are doing flips. My Zanzibar business is providing financing for individuals that can't get traditional financing. And I invest in providing my ability to provide credit. I buy the property, sell it back via contract for deed.
That's a very, very important segue, by the way. I want to talk about that. So remember how we talked about leverage? There's 4 things you can leverage in doing real estate. And that is knowledge and experience, time and effort, relationships, and capital or credit. When you provide capital, most of the time, the credit is done by the general partner and you're an LP. Sometimes when we work, we are co-GP in it, even though he's a disproportionate investor in these deals. So we co-sign on debt together and provide equity. But Corey actually opened a business where he provides credit. He signs on a loan on behalf of his client, gets the money out of the bank, millions and millions of dollars he took out of the bank to benefit some of your clients. And what these guys do then is they do their thing. They unlock value, they move in there or whatever, and then over time they buy you out, they pay off the loan, and that's a really, really good business. Tell us about the Zanzibar mission and how much you have in credit on that deal.
Yeah, Zanzibar kind of launched between Peak Lending, my hard money lending business, and then my Envision commercial.
Yeah.
It was kind of a combination of both. So individual real estate agent came to me and said, hey, somebody would like to borrow $2 million to buy an apartment complex, and via your hard money lending, they want this long term. I said, that doesn't really fit into Peak Lending, where it's 6-month terms, 3 points up front, 12% interest.
It's very
sounds like they're more looking for a traditional bank loan. Why don't we instead, when I provide my credit, I'll get the loan from the bank, and they put down the down payment, and then I sell it back to them on a contract for deed.
So the finance
3, 4, 5 seller financed over 3, 4, 5 years, like we did with our first one, the Mexican restaurant on Lake Street, and then he got an SBA loan and cashed us out. So it's kind of a combination of that. So Zanzibar, I've done 63 loans, 63 transactions where I've bought the property. We've spent about $110 million. We've secured about $110 million of loans that my wife and I signed on through Zanzibar financing and own, from apartment complexes to individual houses to malls, restaurants, the property that the client has bought. I haven't put any of my money into it. They put the entire down payment.
And then you kind of collect the margin.
Then I collect the margin and a payoff in the end when they cash us out.
Do you still have $100 million, or you've paid it off or paid it down?
No, it continues to grow. Though most of those, I started 3 years ago, and only a few contracts have come up due. Some of them have renewed, and some of them have paid off, or they've sold their property. So we're continuing to grow. I've got
Yeah.
9 banks that we have relationships with. I have a guidance line. I have open credit with them. I bring them a deal, and so that continues to grow and expand. We just actually opened up an office in Ohio, in Columbus, Ohio,
Nice.
Zanzibar.
Beautiful.
To serve that population there and that community there. Besides just here in Minneapolis.
This is a creative way to do real estate. How do you serve your clients? Well, some people need capital. Other people have some capital, but they need credit. Other people need advice, knowledge, and experience. Other people need time and effort. Like in my case, I don't have a lot of time. So if I have capital and credit, but somebody has the deal and time to work on it and experience to work on it, it's all in this collaboration that you can unlock value, make a lot of money for yourself, for them. And as long as the system is effective and equitable, it will keep growing, right? And that's what you've done. So I applaud you on that. I think it's a great, really, really good business. Everything you've done has been amazing. I'm very proud to call you a friend, to call you a partner. We should do more deals together. I want you guys to understand the basis to your success, the wealth you build, my wealth is inside this right here, a relationship with a friend, partner who will help me unlock value. I'll help him create value. And all we're doing is we're cooking a soup and we're sharing the upside. We're doing a deal. And as long as you share the upside equitably, fairly, without any drama, your pie will keep growing. You'll keep impacting more lives. And that's ultimately what our success in business, in real estate business specifically, is all about. So I hope you got a message. Corey, if they want to reach you, how do they get a hold of you? Can you provide some website or maybe email address?
My peak lending is gopeaklending.com. Zanzibar Financing is zanzibarfinancing.com. My direct number is 612-207-3450. My easiest email is corymcc@yahoo.com. My shortest and easiest.
If you call Corey and ask for capital, I will be elated. I'm not going to be jealous. Corey does business with many, many of my mentees and friends, and I do a lot of business with a lot of people. When you have abundance mindset, all you want to do is just help people to grow.
Yep.
And help buildings to unlock their value. So I really hope you got value out of this episode, and thank you for watching. And if you want to ask questions, please either DM me or comment below. Please like and subscribe the channel. We really want your support. And if you like this type of content, please like and subscribe, and I'll be happy to produce more episodes and bring more of my partners and share them with you so you can do deals also. Have a great day, and I'll see you in the next one. Bye.